right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. It is Wednesday, October 11th, 2023. God, I almost thought it was Tuesday. It is Wednesday, October 11th, 2023. Glad to be with you this morning here on the YouTube channel. Welcome aboard to Gar Capital. It's time to rock and roll, talk about the markets. We just had some news come in regarding the Producer Price Index. PPI is the acronym. Let's go around the horn to get started. Dow futures up 121 points, NASDAQ up 0.41%, S&P up 0.34, 4406. We're going to go ahead and chart that together. The Russell 1795 this morning, up 0.28%. Did you know the Russell is up 5 sessions in a row? A lot of talk out there about small caps. If you guys remember, we were long and then we got hit on that. Let's see if we can get above 1800 on the Russell and see what we can do above that. 10-year Treasury yields 4.575%. So yields are coming down. Have you noticed that yields have been coming down really since the headlines in the Middle East? Why is that? So if you guys remember, I did a video in January talking about kind of the predictions or the preview of the upcoming year 2023. We talked about the three things, or the three principles, or the three things that we expected: a lower dollar, lower yields, and lower inflation. So far, lower inflation has worked because it has been gradually coming down. The rates call has worked in the first half, but then we got the spike in September and August, September. That's where we got the spike, and of course, lower dollar, which technically speaking, we are in a lower dollar on a 52-week basis, as we had the peak last year. But as we know, we've been popping off a little bit on the actual dollar. We're now about 105.74 as of this moment. So lowering dollar, yes. We'll see at the end of the year if these predictions hit in terms of the principles. But the main one that I've been saying is I still believe that we're going to get all-time highs on the S&P by the end of the year of 2023. Now, we're going to chart that together as well and see if maybe the prediction holds up. Is a bottom in? We'll see what we get. But so far, really since the conflict in Israel and the West Bank, Treasury yields have dipped. Granted, Monday there was no bond trading, but bond futures were showing strength in government bonds. Why is that? When those are afraid overseas, think of a safer place to invest your money in the United States. Not many options, especially not many options paying this kind of yield. Okay, let's say the Japanese yen market. Japanese government bonds are a safe market. They're not paying 4.5% on a 10-year basis. We may have to assume that if things escalate in terms of geopolitics, this helps the government bonds and U.S. government bonds and bond yields come down because the demand flow from overseas will come into a safer asset. So let's say, for example, you're an investor in Israel right now. Think of a place you'd rather place your money than the United States. Maybe the safest instrument, let's say you have a hedge fund over there. My goodness, I just hope they're safe. Let alone they need to invest capital out of the region. They're probably more than likely going to go to the United States. As you can see, rates are lower. That's showing bond demand on these government instruments or government debt. So the idea again, guys, is that capital will always flow through the most profitable yet safest enterprise. Because you can have high profit expectations, but it's all about the risk ratio. Are these returns adjusted for risk? Again, you could always put money on a number, and if it hits, great. But what was the risk on there? What was the risk percentage? What was the exactly what you invested versus what was expected to be invested? All that stuff, right? So with that being said, this may help government bonds lower these rates, all right, based on bond demand. And remember, we still have trillions of dollars sitting in money markets. If these rates, which those are variable, if those rates come down, whether it be a Fed pause or a possible 10-year or government bond yield retracement back to where we were before, a lot of that flow in capital is going to try to chase a possible top in yields, which then exacerbates the situation and making rates go down. What does this mean for the broader market? Lower rates helps really one big sector: technology, tech, yes. So let's bookmark that for a second as we go around the horn. Crude oil down 0.88%. That's at 85.24. I'm going to see if that holds that trend line or that support there. We've talked about that 85 level many times before. And you can see that we are holding up right there at the 50-day. We do have a gap to fill here at 83.27. We did trade NASDAQ futures yesterday and we caught it. So let's see if we break the recent lows of 84.68, give us a chance to short crude oil to 83.28. It might be a scalp, but again, just playing the gap fill here. So let's go ahead and draw that, and that'll be on the watch list for me today. But keep in mind too, tomorrow we have crude oil inventory. So we'll see if there's any kind of news headlines or news flow from the Middle East or OPEC that may change things. So let's go ahead and keep going. Then I'll answer some questions, guys. Gold, gasoline futures down 0.38%. Gold futures up about 0.67%. Again, risk-off environment. 22.23 up 1.28% on silver. Copper is down this morning. 0.006. Euro dollar up 10 pips. Dollar yen up 14. And pound dollar up 27 pips. Bitcoin is pulling back nearly 1%. But Ethereum is up 0.54%. The VIX is down 2.88%. We talked about the VIX seasonality yesterday. The dollar index is pulling back. Let's take a look at that. And boy, are we are right below the 20. If you get this downside down to 103.19 or even to the lower end of this trend line, equities are going to bounce. Equities, if that happens, the bottom is in at least for the year. So let's go ahead and answer these questions quickly. Tesla, let's look at it. Tesla was on my watch list. I traded it with Masterclass yesterday. So again, they caught it. And then I got a little thread here that says, I got it at a better price. 40% on Tesla. Again, I took it here. I left a runner, 52% on Tesla. So we had one of the students create a thread for me. Filled it yesterday, 9:47. Is that the one? Yes, 9:47 in the morning at 264, and we did catch it. So if we do break above 269.36, we can play the 280 calls for next week, or you can play the gap fill up to 289. So Tesla is definitely looking solid as we are now above that trend line. Let's extend this to the right, and you can see the trend line from really the weekly. You can see where we are. So right off the 20-week moving average, above all major ones and above this key wick trend line, which we've broken above, but again, my target is 290. So again, I'm expecting more upside on Tesla. And again, if that alert does break, I'll talk about it on Discord. Let's take a look at Roblox on the move. High betas, good. As we know, we've gotten a little bit of a boost up in Roblox and the high beta names. 33.70. So we need to we're above the 50. We have a gap to fill here at 32.48. So you got a couple of moves to do. We can either wait for the break of 31.18, which is the recent highs, and then you could go right to this support here of around 33.70. Or you can wait for this 32.51 to break, and then you could play this gap fill or this gap fill here up to 36. So let's keep an eye on the volume first. And again, if you're talking about actually investing in the name, the best bet you really want is if you can get above the 200-day moving average, which is 36.59. Again, let's get above that moving average and see if we can get some more momentum to the upside as I expect the S&P 500 and all these stocks to move higher. As I expect the dollar to roll over, I expect yields to pull back. Let's see. How's Boeing looking in the 190-200 range? Pretty choppy. Take a look at the daily. We need to break above here, which is 196.18. I would say 200 breaks. We're just back into this range here on the daily. So not much to do here. I really wouldn't want to tempt a trade here just to get to 196. It's too close. So if you get above the 20, sure, you got until 210. Play the 200-day moving average resistance, if not target. But I think there's better setups than Boeing. I think Tesla's a better setup. Why is plug high so much? You're talking about why is plug bouncing so much? The whole market bounced. And again, you have lower yields, lower dollar. Very similar to Roblox, guys. Look at the names that are falling. Is plug even related to Roblox? It's all about flows. And again, these stocks right now, at least in the last couple of months, due to rising oil prices, rising interest rates in terms of yields, it's hard to justify to somebody, an investor, to invest in something this risky when you can get higher rates of return safely in bonds. So all you're having right now is a market where there's actually some kind of option. Back in 2010, 11, 12, 13, 14, post-financial crisis, bond yields were nothing. 0.5% for a savings account, maybe 1%, 1.5% for a CD. You're going to be wanting to go for these high betas or higher growth names in that environment over the long term. But when you have higher rates, now you get to be a little picky because your money, your dollar, is worth more, hence the dollar being stronger. That's how it works. So it's nothing wrong with Plug, nothing wrong with Roblox or these high beta names. It's just the fact that right now they're just not that attractive in this environment. We would need some kind of bottom in rates or a top in rates, and we need some kind of movement in terms of the dollar to justify a bottom, at least a defending of that S&P 500 200-day moving average. So what's the expectations from me? We just had the PPI number. Let's go over that rather quickly because I totally forgot. And you can see here, PPI final demand month over month is 0.5% versus the 0.3% estimate. PPI year over year actual 2.2% versus 1.6%. The estimate was 1.6 on the, the previous was 1.6%. The estimate was also 1.6%. So again, getting a step higher in inflation readings from the producer side. Core PPI, we strip out gas and autos, 2.7%, and the forecast was 2.3%. Yet the stock market reaction is still positive. We're off the highs, but again, pretty resilient seeing this. So taking a look at the S&P 500 here. Again, like I spoke about, this is S&P 500 futures. Again, kind of bouncing off that trend line like we talked about, the 200-day defended. Here's your zone. This is your zone of support that we've had really since June. The fact that we recaptured that, this is your line in the sand, guys. If we can break above 44.27 and 44.40, okay, 44.40, let's keep that number in our head. That's the 50-day moving average. That's above all major moving averages, right? Once we get there, the bottom is in markets. Now you have all of this range here from 44.50 to around 4,800. Let me see if I have that. 48.08. So again, not the earliest, but man, that's a pretty good setup. And 44.40, guys, is the 20-week moving average on the weekly. Look at this perfect symmetry. Now we've had some bad news come in, black swan events, I would assume, if you want to say the Israeli-Palestinian conflict. Black swan meaning an event that you really can't expect or forecast. We've had rising oil prices. We have rates highest in 20-something years, 30 years. Consumer confidence wobbling here and there. Inflation readings still elevated on the PPI side. And look where we are. So the question is, we have CPI tomorrow, yes. So we have one more inflationary reading. But reading this PPI, CPI may come in hot. Do they price that in today? I don't have any risk open in terms of signals. We caught Palantir yesterday. We caught Google and Apple earlier in the week. I caught Tesla for masterclass. We also did NASDAQ futures. Let's keep an eye on S&P 500 futures. If we can get above 44.27, maybe we can scalp to 44.40. Let's see if we get a shot or above that. If we get some moves, but right now we are just slightly above. Let's see here. Chad's asking, can you chart the upward channel on the dollar late July? Yeah. Let's see if I can bring up the daily. Since July, yep, the upward channel. Take a look at that. And it's breaking down. So let's take a look at that. Mine's a little more long term, but yes, I saw this on Twitter as well. You can see it right there. Yeah, this is back mid-July when I did the video saying that this is where the dollar bounces. We get some oversold bounces. Breaking down here on the dollar. Yeah, 105. We're below 106. You got to stay below that. That was the March high. So we're revisiting that breakout. Let's see if we get a little bit more of a pullback. 105 would really help markets. If we can get to 105, I think that'll be enough juice to get us to 44.40 possibly. A lot of moving parts. We still have that CPI number tomorrow. Pre-market, markets are holding up, but again, anything can change. So you guys need to stay frosty. We're just going to be watching as of right now. So we can always do any kind of expiry in the option side for next week. We could always do futures where we have our flexibility to get in and out even beforehand. We'll see what we get. 3M, let's see it, a materials company. One of the old timers in terms of chemicals like DuPont and Dow Chemical. Pretty ugly price action. Very similar to a lot of names out there that took hits in 2022 with rising inflation, rising rates, rising costs, yada, yada, yada. Let's go to the yearly. Weekly, not a great chart. Not a great chart. Now, it might be a great company, but the stock does not look great. So what do you need for 3M to go higher? Well, you need to get above the 20-day moving average, which is 94.44. Pretty similar to like a Disney. These names that, you would think, oh, the company's doing bad, Target, but 3M is doing that as well. There's no controversy with 3M that I know of. So again, just names that there's certain times that certain sectors get a lot of demand and there's certain times that they don't. The company and the stock are not the same thing. They're two different entities in a way, two living, breathing things. The stock can move relative to the company or inversely to the company. Just depends. There's sometimes companies that make no money that the stock soars, and there's companies that make great money, great cash flow, but they're very boring and they don't have a lot of attention to their stock. So the stock is relatively flat or kind of sideways, and they pay a dividend. So 3M, no, I don't see any reason here to buy it. I guess if you get above 105, maybe you could start creating a new trend, but it's still downward trend. It looks like you're trying to catch a falling knife, and there's way better setups out there for other names to at least in terms of looking for that rate of return in the short term. Now, again, if you're looking for long-term 3M, then you'd have to do a little more research into, really their sector and what their businesses are and their executives. Because I've never owned 3M personally, and again, that is a materials company. If you don't want to be beholden, but you kind of want exposure to that sector, there's different ETFs out there that are just based on chemicals and plastics and refineries and et cetera, or consumer staples or dividend aristocrats. I want to say 3M is part of that, but not really sure. But that's where we are for the day, kind of holding up the NASDAQ and the S&P. We'll see what we get. Again, I'm looking for 15,450 on the NASDAQ. I'm looking for 44.27, 44.40 for ES. We do have CPI tomorrow. I want to stress that. Yes, we had a very hotter than expected PPI number. So far, the market is holding up, but we just need to stay above the 200-day after this inflation. If not, it looks like the bottom might be in, guys. That might do it. We may have done it and hold the 200-day, barring any kind of craziness, obviously. What are your thoughts on the 440 SPY calls for Jan 19th? I assume they're going to be pretty expensive. If you buy them today, you're basically saying that the market is going to shrug off the CPI report, and you're going to have that Q4 seasonality, which I agree with. I just don't know what the number is on the CPI number. If you can hold off on it a little bit, it is at 435. You don't need to buy that much time. Again, the longer the time you buy, the more expensive the premium. So if you kind of want to shorten that maybe to December, November is usually pretty solid. All you're asking for is a $5 move, and you put a stop at 434. I think you can pull it off, Conrad, but I would shorten the time frame. Again, November is very strong when it comes to seasonality in the S&P. December tends to be as well as very strong, but last year December was kind of wobbly. January tends to be strong depending on your expiry, but you're not asking for, if you were doing the 450 calls for January, different story. But the 440s, I think, are a little too close for what you're looking for. So again, maybe kind of tweak that expiry to November. Take a look at the volume. Maybe there's something that stands out that you can take a look at in terms of unusual options or unusual options bet that we could tail in terms of a SPY going higher. We'll see what we get. We'll go and leave it there, guys. Have a great rest of your morning. I will see you guys tomorrow for the next morning note. I'll catch you guys on the Discord. Link in the description below if you want to be part of our free live market blog where we talk about the markets all day, update positions, give out charts and news. Love to do it every single day for y'all. Have a great rest of your morning. We will see you then. Cheers.